Welcome to Markets Now. I'm Michelle Rook along with Scott Varilek with Kooima Varilek. A quietly mixed day in grain and livestock futures trade, but I want to talk about corn. Tried to bounce early on, but then have faded as we've got rains on the radar. And so it looks like the mentality here is still rain makes grain.
Yes, and thanks for having me. So rain, the weather, that's been the leading story is in how we're unfolding our grain trade here in the last few weeks, and it's been a take your breath away kind of market. How fast the market went from basically 490 to 630. It's hard I don't know that I've really seen the grain market rally that hard that fast, and then only to be followed with the other side where we drift right back to the lower side. So it's got a lot of traders crossed up on both sides, longs and shorts, and it's been a wild ride. We talked cooler, wetter temperatures that were coming, and they didn't show up by the middle of June. So we rallied, and now it's here. So we're on the way back down. Pretty big system moving through today on Thursday. That's going to get a very nice drink in some areas that are in desperate need for it. So we've seen the crop ratings. We've seen how they've really been hammered and decreased over the last few weeks. And at some alarming numbers, only to be followed by a break in the futures. Well, we're talking, this is a futures market. We're looking at these weather models and seeing this rain start to progress. And it looks like in the next few weeks, still going to be some more active patterns, some more chances for some more rain coming across. So I think that's where I'm going to lean on the weather, that, yep, we're going to get some nice rains coming. If it doesn't show up, then we'll probably have to adjust. But for now, I'm going to respect that we've got some moisture coming in, and that these genetics can hang on, and that they're going to be okay. And we're going to recover nicely on some timely rains. Maybe it's not how much rain we get all year, but at what time are they going to come? And these might be some timely shots here right over around the 4th of July weekend for us.
But you got crop ratings like corn's only 25% good to excellent Illinois. The drought monitor this morning showed 70% of corn acres are under some level of drought. So the market, have we taken out too much weather premium, I guess?
I don't know that we have. We moved a little too fast, in my opinion. I alluded to that on how quick the move was up and then back down. We have noticeable stress on crop. That is for sure. How much are we going to change that in the coming weeks will be early for me to tell, but I'm going to stand up and say that I think the crop's going to be good enough, and we're going to have to look at some of these other stories. What's our demand doing? What's our dollar doing? And we still have troubled stories over there. I said that weather is our main story that we're trading. We're not really talking about we're having some poor demand. We're not getting the exports. We're not seeing the usage that we need to. So
Right.
If we had a little bit of aid in some of those other categories, I think we'd be able to put some premium back in. But weather alone is just not going to be able to get it done, in my opinion, especially if it starts raining right now, end of June, beginning of July. It's going to be tough for grains to fight that off and try to rally.
We're taking out some bigger support areas again here. We've taken a lot of them out in corn, but we've actually kind of held or bounced off, I think, the 50% retracement level here in the November bean. So is that just because that crop situation is tighter, or is this China rumors again, or what? Because that kind of circulated at least once this week.
Yeah, it's a good point to bring up the charts, because they've been, when you have moves, happening so fast, you're going to start to lean on your charts just a little bit harder. You had that gap in the corn at 533. We went down and filled that this morning, tried to bounce off it. We had a few trial runs away from it, unable to do it. So we kind of take out that little bit of support there. I don't think that that's a good sign for the corn market that it filled it, but you do have the November beans holding at halfway retracement here on this move. That's going to be a pretty key line to watch, and something that we can go forward with and try to maybe go with the move, whether it is going to take it out or whether it's going to bounce off it. Because yes, we have this 4th of July weekend coming up. There's usually fireworks, pun intended, especially in the grain market. So when we come back from our little holiday off, Wednesday is going to be a pretty interesting day on which direction we're going to go. If we're going to see some funds backing this market, are some of these other rumors going to come true? or not. But a lot of liquidation of the funds over the last few days. So seeing the movement there has been pretty wild, and I expect that to carry into next week.
Yeah. So the cattle market is rebounded after some early weakness and the pullback in corn, I'm sure part of that, but we've held up really well this week in light of some lower cash trade. So where do you see the market heading from here? Can we kind of build on this week or not?
Yeah, the cash news has been okay, I guess. We're slipping a little bit, but still at some great prices, and it's still a price that the feed yards want to dive into their pens and find out what's ready and try to get cattle moved, because they're going to make some good money at these prices. So it's hard to say, okay, I've got a high cost of gain price and high feed costs. I'm going to keep feeding these and wait for July or August. I think you're more apt to try to move these cattle. Take that, maybe it's $300 a head that you might be able to make here, or more, or in that range. So I think we're looking at trying to continue to move cattle, and that's going to help us out in the long run. But the demand's been excellent. Choice boxes have held on. We've had great holiday runs here, and there's been a little bit of drift south on the box prices, but not very much. When we're still sitting at these levels that we're at, Packers got pretty good margin to work with here. We've got some daily kills that I like, keeping the chains moving. So I know that I have to probably take my bullhorns off for a second, put them to the side, and try to get through July and into August before I can, in August markets, before I can really start to stand up and say how friendly I am again, just because we do have the dog days of summer coming. So trying to make sure I'm a little bit protected here at some of these prices here, take a little bit of time off. Yeah, I think that the summer prices can hold better than expected, but still feel like we could have a little bit of drift in some of those prices, as maybe we'll get some leverage shift as we get some more calves ready. I think the demand could slow down a little bit. It's not going to be able to slow down much. If we had beef prices break too much, we wouldn't have enough to go around. I'm still in the very tight supply camp. And then we'll buckle up and have a really nice fall and start moving things back higher, in my opinion.
Yeah, and we still have this big discount with the futures to the cash. And the other question I have, we're end of month, end of quarter, Scott. These funds have been really long, especially in the live cattle futures. Do they defend that long position here end of week? And if they do, does that mean they're going to continue to?
I still think there can be some defense on the long side. I mean, we're already showing a little bit of a discount from where we're at now, so I don't think I'm seeing any signs that are really alarming the funds to say, hey, you better get out. We're still looking at the same tight supply. We haven't had any major chart damage, and so I don't see that they have signals telling them to start to get out. We're still seeing some cash prices that are okay, the regionals and the lower 180s. That's still all okay. So I think the funds are going to still defend and try to hang on. Yeah.
You and I have talked about all the reasons why we've had this big rally in the hogs. We're seeing, well, the last 3 days, we've seen these forward spreads work in here again, the front end of the board leading. So where do you see this market going coming up? And I know we have the hogs and pigs report out today, so this maybe isn't a good test of where we're going, but.
Right. It's had a good rally, and now we're in a little bit of a sideways chop here. The fronts led the charge, delaying Prop 12. Really helped these fronts out because everybody was so scared to hold any length in that when we were coming into July, and it was going to be such an uncertain, how is this going to affect the market? And it was going to be a little bit tough sledding. So as that gets pushed back, these summers can have a little bit more of a rally. I am hearing, plenty more of the feeder pigs showing up. Some of these guys are getting some barns filled up. So I think that's going to be a seasonal normal trade that you get into October through December. We're going to have a pretty good supply in front of us. So summers can maybe trade sideways here into this range until we get through a hogs and pigs report and try to find out what else we have to stand on, which direction we're going to go. But I still don't know that we have a large breakout to the upside happening, even though there's probably plenty of traders that do. I still think this holding pattern in the middle 90s is probably where we could stay for a while.
Okay. Thanks for joining us. Scott Varilek with Kooima Varilek, and that is Markets Now.